Hello, everyone, and welcome to Edison TV. My name is Aaron Atkar. I'm an analyst in the healthcare and investment trust teams here at Edison. Today, we're speaking with Polar Capital Global Healthcare Trust, a London-listed investment company focused on the global healthcare sector. Welcome, Jamie.
Good afternoon. How are you?
Good.
Great.
So to start with, can you give us some background on Polar Capital Global Healthcare Trust and its investment strategy for those viewers who are less familiar with the trust?
Yes, of course. I'll go back to the original guise, which is 2010, and that was launched by Gareth Powell, the current head of the healthcare team. And really, the view back then was the team felt that the pharmaceuticals industry was oversold, it was attractively valued, and it would re-rate, and also had a yield component. And indeed, that turned out to be reasonably prescient. But then in the summer of 2017, the board took the view that actually that focused on income really was detracting from the ability of the management team to perform. And so the mandate changed to one of growth. And that's where we are as we sit here today. So that's kind of like the background. In terms of the structure, the way we look at it is really in two sleeves. One is called the innovation portfolio, one growth, but that can be a wee bit misleading. What I mean by that is that all the innovation portfolio means is that at the time of investment, the company has to have a market cap below $5 billion, and then the growth portfolio is above that. So don't be confused by that, because obviously large companies can innovate as well. And we can have up to 20% of the assets in the innovation portfolio, and the balance will come in the growth portfolio. And there we can go all the way up to the mega caps in terms of structure. Typically 25 to 60 positions, so very concentrated. And actively managed. And in terms of the objectives, what we're trying to achieve is, can we, obtain kind of capital growth from a portfolio of global healthcare companies, and hopefully that's really what we're trying to achieve.
Excellent. So, what do you believe are the key trends / drivers in the healthcare sector at the moment, and how is Polar Capital positioned to take advantage of them?
Yeah, great question, Aaron. So I'll focus on long-term and more shorter-term, if I may. So if you look at a lot of the literature we've written, we've focused really on 6 durable growth themes. One is called delivery disruption, this idea that can we treat patients not in a hospital in a lower-cost setting? We believe the answer to that is yes. Another theme is innovation. We think the healthcare industry is extremely innovative. Consolidation is one. It's highly fragmented. I think companies will use their balance sheets to pursue mergers and acquisitions. And we also look at emerging markets, prevention and outsourcing. So they're kind of like the long-term themes. But sometimes we'll adopt a shorter-term lens, and we'll look at what might be more pertinent in the next 12 to 18 months. So, for example, it might be elevated levels of utilization. It might be access and affordability. And it also might be this idea that, does the healthcare industry have the capacity to overlay artificial intelligence and machine learning on top of existing technologies? So they're the kind of the themes. In terms of how do we try and get exposure to that. So relative to our benchmark, we have an 08 in biotechnology. Hopefully that reflects our constructive stance on innovation. We're also exposed to facilities. They're simply hospitals who take patients through. And on the outsourcing theme, we do have exposure to life sciences and tools, but that's not necessarily your traditional manufacturer of capital equipment and consumables. That's more on the contract manufacturing side.
So circling back to one of the themes you just pulled out, how significant an impact on the healthcare sector do you expect from the growing role of AI in areas such as drug development itself, as well as diagnosis and, say, medical imaging?
Yeah, it's a very topical subject, of course. And we kind of separate into two themes. So one is, where are we seeing and potentially seeing a positive impact today? And we think the overlay of AI and machine learning on existing technologies can help things like diagnoses, things like colonoscopies, ultrasounds. Can you improve the quality of the outcome? Can you help the physicians spot things they can't with the naked eye? We're potentially seeing it also putting options into the system and making employees more efficient. Can we grow our top line without necessarily investing heavily in full-time employees? And so we're starting to see that kind of creep into the industry as well. When it comes to drug development, we're a bit more circumspect. Clearly, there's some truly exciting things going on, but ultimately we're a heavily regulated industry. Patient safety is paramount. And so we don't think we're quite at the point yet where it introduces such phenomenal efficiencies it's going to make a huge difference. You still have to design the studies, design the trials, design the drugs, and ultimately run the long-term studies to prove those outcomes. So I think when it comes to R&D productivity, maybe a wee bit further out into the next decade, but in terms of today, we are starting to see some impact in certain areas.
So turning now to current events, what's your view of the impacts on the recent US presidential election results on the healthcare sector globally?
Yeah, so if we go back a few months when we were coming into the election, we were of the mind that there were really two areas of focus for the market. One was access to care, and one was drug pricing. So let's focus on access to care first. And the view was if we had a Trump administration, there was potentially two impacts. One would be, would he reduce the subsidies that are available to low-income Americans? And that's really affected two parts of our industry called Medicaid, which is low-income Americans, and the exchanges that was brought in by Obama in 2010. So that would be a perceived negative for those insurance companies that operate in that field, but also maybe for the facilities due to the fact there's just less insured people. On the positive side of access to care, we felt that a Trump administration might be more constructive on the rate environment for Medicare Advantage, and that really is products for the over 65s or the US seniors. And indeed, when he first came in, we started to see that play out. On the drug pricing side, it's just a lot more opaque. I mean, we haven't heard much really from him heading into the election. We took a view that perhaps with the Inflation Reduction Act, which was August 2022, I believe, would he potentially slow that down? Or would he go into the negotiations with the government and try and get greater discounts? We just simply had no idea. And so things were really kind of playing out as we thought they might. But then obviously the kind of left field announcement really for the entire industry was when he nominated Robert F.K. Jr. to be the potential head of the HHS, which is the Department of Health and Human Services. And that really created a bit of uncertainty simply because some of his public statements around things like vaccines, fluoride in water, the association between HIV and AIDS. And so that did create a bit of uncertainty. But there's a few things to point out, I think. Firstly, it's a nomination. Let's see what happens at the beginning of next year. Secondly, we've had some nominations to the FDA, the Food and Drug Administration, the CDC, and the Surgery General, and they're all qualified doctors. And so we're hoping there's a bit more balance that's going to be brought into the debate. But I think the bottom line is that we have seen this before. We have seen this uncertainty before. And I know it's only history, so caveat applied, but we just think the uncertainty is a really interesting opportunity for healthcare investors.
Excellent. So our final question today, what do you see in terms of valuations in the sector at present? And then just following on from that, what's your outlook for the sector as we moved into 2025?
Yeah, thank you. So if you look at the US, I'm reflecting on 1 year forward PE data, it's roughly around a 20% discount. I just looked at that this morning, and that compares to a historic modest premium. And so that is one interesting observation. If you look at the global data, it's also at a discount, maybe not as pronounced, but certainly relative to history, that looks attractive. So I think valuations are on your side. In terms of our stance, ETF outflows have been very aggressive. We think an interesting contrarian call. The fundamentals of the industry are strong, particularly on the innovation side. The demand for products and services continues to be high. And so after a period of challenging relative performance for the industry, we're hoping, particularly if you look at the potential earnings growth next year, that 2025 could be a lot more interesting.
Fantastic. Well, Jamie, thank you very much for your insights. I look forward to following the progress of the company and indeed the sector. Thanks again, everyone, for your time, and have a good day.